Since the last time on the Startup Download, how some of the best companies in the world pivoted and why it's normal. Another humanoid robot startup is afoot, a few thoughts on the state of the pre-seed market, why the right now is extremely important. It turns out the Bay Area still reigns supreme when it comes to startups, some IPOs and unicorns, and apparently the US government wants to enter the business of AI, ? My name is Chiedo John, and this is the Startup Download brought to you by the Rocktown Angel Club, helping 1,000 founders build 1,000 startups and investing in the best. So there's this guy named Lenny. He runs a podcast called Lenny's Podcast. He's kind of the bee's knees, and he spent the last few years connecting with the best product and growth leaders around the world, gaining data-backed insights. Well, he put out some of those insights on Twitter about pivots. Link in the notes, but here are some of the highlights. Coinbase was initially just a Bitcoin wallet. If you don't know crypto, think of a Bitcoin wallet just like a real wallet. It's where you store your money. Well, turns out users didn't find another wallet that compelling. So Coinbase pivoted to what they are today, which is a cryptocurrency exchange, meaning a place where you can buy Bitcoin and other cryptocurrencies, something users actually needed and were desperate for. A place to buy crypto above ground, legally, and with an easy UX. And look where they are today. They're crushing it. They still have a Bitcoin wallet, but it's now part of their portfolio, not their core offering. Instagram, I won't have to talk as much about this because everyone's familiar, was a location check-in app, but they noticed one part of the product users were using more than anything else and loving, the photo sharing aspect. So they went all in and we get the Instagram we have today and then some. Twitter was initially a platform for sharing podcasts. WhatsApp was initially an app for showing statuses of your friends. And YouTube, surprise, was initially a dating site where people uploaded videos of themselves before that was the norm. And all these companies pivoted based on real feedback from their users and following the scent they could not have got if they didn't have something in market that users were trying and actually using. Pivoting is normal. When I invest in founders at pre-seed, I expect it. If you're running an early startup and launch something that got you tons of new insight and that insight is now telling you to go another direction, just do it. Be thoughtful, but do it. And rest in knowing that some of the best companies in the world have been there, changed course, and are now the companies we know and love today. Time is everything. Don't waste it. Doing what you've always done because of momentum. I've been hearing more and more about humanoid tech startups recently. I can't tell if it's the next big paradigm shift or another dud that will never happen. I'm an optimist, so I'm betting it's happening by 2030. And then when 2030 hits, I'll bet it's happening by 2040. Nevertheless, TechCrunch shared some news that Kyle Vogt, former founder and CEO of self-driving car company Cruise, that has found itself in a sticky situation recently, is launching a new startup called The Bot Company. And they've raised a lot of Benjamins by some big hitters. And their mission is to build bots to do your chores so you don't have to. I hope it's better than the dishwasher. It's still not obvious that using the dishwasher saves time, but there are a lot of companies eyeing this space, and I'm attracted by the real/hardness of this problem in a sea of digital problem/solutions that are kind of less hard to tackle. This is a problem everyone feels. Too much to do, not enough time. The question I'd be asking myself if I were looking to launch a new startup would be, what new opportunities or problems are created in a world where everyone has or wants a humanoid robot, the same way people have driving robots already? Cars. Imagine not just ordering HelloFresh, but also having a personal chef. Although, if I were a robot and wanted to kill my owner, that would make it pretty darn easy. So maybe let's just start with taking out the trash. Carta put out a new report on the state of the pre-seed market as of Q1 2024. Safe notes are the investment vehicle of choice, and now is the time to be a small check investor. 41% of the checks in safe rounds under 1 million were below 25K. While cash is scarce, now is an amazing time to start angel investing. You can get on some really cool cap tables with 5K and 10K checks. 54% of pre-seed startups using safe notes are just doing valuation caps, no discounts. 35% do both a valuation cap and a discount, typically with a 20% discount in this case. And only 8% do a discount with no valuation cap. I've never been into the discount without the cap. It's more or less only helpful if getting into some super special startup is what's at stake here, and I'm lucky to just be there. if I can trust that there will be significant upside after the first priced round. Now, while safe notes are used the most, and I didn't see this in the Carta report, but they tend to be post-money, at least based on what I've seen so far. When convertible notes are used, they tend to be pre-money notes and tend to be valuation cap notes along with a discount. I know, super juicy stuff. You're probably at the edge of your seat, which makes it a great time to talk about energy. I'm seeing a few companies playing in the lithium battery recycling space. PR Newswire shared that LI Industries raised a Series B to build a battery recycling plant, and Scilab closed a Series A to do the same. And this is why the right time, the why now, is so important. 10 years ago would not have been a good time to do this. It would not have been economically satiating to solve the lithium battery recycling problem and to build the necessary infrastructure. But what changed? The EV revolution, of course. A bunch of EVs started hitting the road a few years ago, and a few years from now, a bunch of those EVs are going to have batteries that will need replacing. So while a battery recycling company wouldn't have had enough volume to have the right economics in place a few years ago, they'll probably have all the volume in the world in a few years coming. Supply and demand. Supply from people getting rid of old batteries, and demand from people who need replacements for the batteries they're getting rid of. Why now? Why now? Why now? Think about why now if you're launching a startup. After 2020, there was a lot of talk about the Bay Area exodus and the startup scene dispersing globally. I can personally speak to the fact that it is way easier to be a part of the global startup ecosystem today, and I live in a small town in Virginia. Remote is now the norm. You don't have to be there. You don't have to fly there. But turns out there is still a lot of value, or at least perceived value, to being there. Crunchbase put out some data showing that in 2023, more than 50% of all global venture funding for AI-related startups went to companies headquartered in the Bay Area, and this is the next revolution. The Silicon Valley still obviously has something special going, and it's where the next big thing is happening. Raspberry Pi and Shein are making plans to go live on the London Stock Exchange with IPOs, according to the Times and Reuters respectively. Raspberry Pi makes tiny foldable computers that anyone can use to learn programming and build tech projects for like $50 or $100. These are really cheap computers, and a lot of folks use these inside of consumer electronics, at least for prototyping, maybe for production use cases, I'm not sure. But they're pretty amazing and have been for some time. Everybody I know loves them. I met some of those folks at CES, and it's cool to see them win. Shein, on the other hand, is an online fast fashion retailer that rapidly produces affordable clothing that they sell worldwide. I'm less excited about that one, but it is noteworthy. The thing that stood out to me in both cases is that they were both founded in 2008, meaning if they exit this year, that would be 16 years to exit. I've talked about this before. If you're planning to do this startup thing, are you all in? Well, maybe. It's not so bad. Another company, Zeekr, just hit the New York Stock Exchange, a Chinese luxury EV brand. According to TechCrunch, they have no plans to launch EVs in the US, which explains why I've never heard of them. But they are planning to go after the European market, and they IPO'd just 3 years after launching in 2021, after delivering just shy of 50,000 vehicles in the first 4 months of this year and operating at a loss. And there's one more interesting action item, Vercel, a platform for developers to build, deploy, and scale web applications. This is the company I keep expecting to IPO. They've been contributing huge value to software developers and the web for a long time. Founded in 2015, they've been delivering huge value. I mean, I can't say it loudly enough. They're amazing, but they've had no exit yet. According to Crunchbase, they just raised a nice $250 million Series E. Vercel was one of the best value creators in the tech space, and 9 years later, there's still no IPO. There's still no IPO or acquisition. For DevTool founders, pay attention. Exiting is not easy, even if you're creating crazy value like Vercel, or maybe Vercel could exit at any time, but with them being one of the best, are choosing not to. Fattening the goose before the feast, that sort of thing. The U.S. government wants a slice of the AI pie. ABC News shared that a bipartisan group of senators has unveiled a roadmap for government-funded AI research to pump $32 billion into an AI innovation over the next several years to cement America's dominance in AI. On one hand, imagine a world where the government could use AI to be more efficient. That sounds way better than what we see today. On the other hand, imagine a world where the government executes a project of this scale efficiently. Yikes. Kind of a chicken and the egg situation. And I worry about the government releasing the equivalent of GPT-4 right when Sam Altman is releasing GPT-100 and the equivalent of artificial general intelligence. What I will say is this, and this isn't me voting for or against it, I just think it's going to happen. I think it's pretty likely we'll end up in a future where everyone has universal basic AI or universal basic robot. Sam Altman called it universal basic compute in a podcast. And this robot will more or less ensure everyone can have their basic needs taken care of with their robot or the AI able to generate income on their behalf. So let's end with some wise words from Jen Abel. It's all just a sales and marketing grind. Your product determines if it's on easy or hard mode. So get to work and get selling, create and capture value, hustle hard. Deuces.